Hello, everyone. This is another session of Stop Losing, Start Trading, the trading show by the Panoptic team. Here I'm Guillaume Lambert with Rosalie, aka the Crypto Queen, where, again, like the title of this episode, the markets move so quickly, but the PnL is stable, which is good. So, first of all, how are you doing today, Rosalie?
Good, good. How are you? It's a gloomy day here in New York. I think it's been gloomy all week. And
Yeah,
yeah,
he is.
there's some crazy stuff happening with the market and lots of uncertainty. But
Yeah,
yeah,
this week was pretty hard. The weather certainly did not help, but the wildness, how wild the markets are, sometimes it's hard to get used to.
yeah, I wanted to also just kind of bring up for the audience, if people are listening, I know we kind of go through our trades and stuff, but if you have any specific questions about your trades or have any ideas or anything that you want to ask us, if you need any advice, dating advice, just kidding. Feel free to just pop in the chat and we can take some time to kind of help you
Life
manage your.
advice. I mean, being a trader helps you hedging risk, securing a win. It also applies to trading life, I'm sure. I've been out of this for decades, but yes, happily married. Yeah, so this is kind of the show where we go over the markets, we go over some trades, we discuss trades, we follow Rosalie's intuition and assumptions, and then the intern trades. They've been doing pretty well. We'll have a quick look at their PnL, but the goal is that we're trading something that is uh, risk off a little bit these days because of the wild market, but it's definitely a good time to redeploy liquidity, especially over the weekend. Sometimes we've seen kind of big moves, so maybe if we have some crystal ball here, we can anticipate some of those. Yeah, I'll go right into it. We have the intern portfolio that we can track, and the intern is actually listening to some of our trades, and they are uh, deploying some of that liquidity. Uh, this is a slightly updated preview of the UI that we're working on, but again, from that window, even though the market crashed and moved and went wild, as you can see, OpenPNL is very mid. But yeah, any one market you want to look at first?
Yeah, let's just start right at the top with the BTC ETH.
This one's easy. We closed our position and had no, did not open a new one. So maybe we'll try it. Let's
Yeah,
try.
let's trade in it. Yeah.
Let's create a position.
It's I my eyesight is so bad I couldn't see the zero. I'm so sorry.
No, that's, and then this is a new bleeding edge build, so it might have been difficult. So we weren't looking at the right place either, but that's fine. So this is the price of Bitcoin to ETH, meaning that currently it's 0.019 Bitcoins for each ETH. It's been going down consistently, and we can even see since the beginning of since launch. Oh my god, 50% down. And yes, how would you trade this slope if you want moving forward?
For sure, still bearish to neutral. I could see it maybe potentially going down, but also stabilizing.
And are you the yes, are you very bearish or bearish neutral type of thing?
Bearish to neutral more. I think yeah, ETH might go down faster, but Bitcoin will probably continue going down
And
for.
do you feel like you're taking a bit more risk? Maybe let's see. Yeah, we could do call spreads. We've done. Unfortunately, most of the liquidity is in range, so that call spread will not be for free. Do you want to attempt and do a naked call, or you still want to maybe buy a call spread? But
I think yeah, maybe naked call. Yeah.
okay. And a lot of what we see here is if the price were to explode, lots of risk. But if it were to keep going down or stay neutral to bearish, would make money because the range is here. Uh, Maybe we haven't done this in a while because it's always multi-legged trades. But if you remember the delta, what delta would you choose? And maybe can you remind the audience what delta means for some of these options?
Yeah, delta is, kind of percent chance you have of being correct. So if we look at that, what is the delta right there?
The chance to being Wrong, but
Okay,
still.
well,
So this
um,
is 29 delta.
29 delta. So we have, um,
70% chance, which
yeah.
is the odds are in your favor. If it's a bearish trade, you expect this to happen. The key point is that there is quite a bit of range and we are offset. And you can imagine if we're here, it's 2% of being wrong. So unless it does explode, you make money. But yeah, typically 30% is a goodish number to start with. Well, to put the odds in your favor.
Yeah, I think, yeah, I mean, this would make sense to me right now if we wanted to do selling a call option, but I would prefer to maybe do multi-legged, um,
A put as well?
like a strangle.
Okay. So this one has no risk to the downside, a lot of risk to the upside. And what Rosie is saying is that this is fine, but then maybe adding a bit more risk in a weird way. And if we look here, we have two legs, put in a call. They kind of offset one another, but you have risks on both sides. That means that when we mint it, we may have to kind of offset it a little bit. That still shows this bearish
Mhm.
trend. But yeah, that is another trade which is a bit more risky, risk on both sides. But yeah, as long as you're comfortable with it and are okay with being range bound, this is more neutral than bearish neutral, but between 0.14 and 0.22 type of thing is it could be another trade.
I'm expecting quite some volatility throughout the next month, so I just want to learn, like, figure out what the best way to capitalize on that.
Oh, yeah, because the this is a monthly option. So monthly is one time scale. At the speed at which news come in, it could be an eternity in the future. We can do weekly, which would be much narrower. If you have the stomach for it, we can do daily as well. Uh, but yes, the daily. Some people out of range too, but yeah, they created daily options. But would you venture into the weekly and be a bit more limited in your assumption, or use the monthly and be a bit more kind of open ended?
I think monthly is fine,
Okay.
unless, yeah, we could come back and manage this on even Monday or Wednesday if we want to do weekly. But right now, everything's moving so quickly that I don't know. I don't want to miss.
Okay, so it could be a straddle, two legs, twice the capital efficiency, but we still have these negative deltas here, which means that the slope is negative. So if we benefit if it goes down, it was not unlike I think the previous trade, but yeah, that could be a very good trade for intern. And then since I didn't do it last time, but I did post it, but didn't the intern did not trade. So let me paste this again on uh, the chat on YouTube. If you're listening, you can actually see it. There we go. Offset strangle in BTC. Cool. That's one trade. The your favorite. Let's go the ticket Bitcoin too, because this one unfortunately seems to be losing a little bit. $10, but yeah, let's have a look and see what we can do with this.
Oh, I see. Oh, wow.
Uh oh. I think the first time that we catch this live, or at least we've seen it happen. But yeah, can you tell me if you look at the current range, what likely happened?
Yeah, it went, price went up more than expected. We're out of range, so we're going to be losing lots of money quite quickly.
Yeah, so we are effectively now holding a short position on ticker Bitcoin, and the price did go up very quickly over the past day. And the more it goes up, the more you lose because you're short. So all of this fancy options trade is not helping you because it's out of range. But yeah, it's not the outcome we expected, but it is definitely something that's not the end of the world. We
Yeah.
did earn a lot of premium, and what was a likely a 10% loss is 3% or even less. Um, but yeah, I'd
Yes,
say
yeah,
that
time to close.
yeah, definitely. Let's get out of the way. Either redeploy, recenter, or it could still revert, and that's kind of the nature of the markets. But because we have a monthly option and it moved in 10 days outside of that range, we might be better off with kind of redeploying than trying to wait for it to come back because 10 days is way well within that time scale. So there's not much more we can expect. It went wrong. And these large moves are pretty hard uh, to manage. So yeah, I would say we can close it.
Yeah, and for well, I'm glad the token's doing better than expected. So
It's, I mean, okay, let me see. This is a bleeding edge preview. I think we have this too. So remember, this is your PnL.
mhm.
Might be off a little bit on the y-axis, but this is your PnL, same as the one we've seen. However, in your wallet, you own some ticker Bitcoin and you own some ETH as well. And in theory, that ticker Bitcoin that you have in your wallet is earning money if the price goes up. So we did not show this before, but now we have this new way to include deposits. That's the menu here. And now we see what used to be some risk on the upside is a bit less because you own some Bitcoin. This is actually, I had to do the math a lot myself before we added this to say, okay, wait, the ETH, now we add it to the PnL chart. Not by default, because sometimes you still want to see your positions, but here now, I would expect that despite the price going up and leaving the range, you did make money there. So you may still have more ETH in your account, if that makes sense.
Yeah, oh, that's such a helpful tool to have. I think a lot of protocols, it's difficult to really understand how much money you've made since the beginning. And like, if you continuously, add more liquidity and stuff, things can get kind of confusing. You're gonna have to like have a spreadsheet like at home where you write this
And
down. So it's
in
helpful.
regular options trading brokerage firms, you start with cash and you trade with cash. And it's very rare for you to have a bunch of, I don't know, Amazon stocks and write Tesla options on them. You could still have this stock being part of your collateral, but it's more likely to be your cash balance. But if you do have some stocks or some equities, then yes, we should allow people to consider this into their deposits. We deposit somewhere that was 50-50 when we started with, and look at this, we made 25% in ETH, 14% in Bitcoin. So it's still overall making money, even though that 1% is losing. But yeah, the fact that we have both assets means it's a slightly different calculus than if it's pure ETH or pure cash. So I would say that again, let's do the Eigen trade as well. But Eigen is also another one of those where the price did move, but because we have the two assets in the wallet, what looks like a somewhat neutral position has a tiny edge. But yes, this is also another example of your deposit contributing to your PnL, so that you are maybe better adapted at managing the risk there.
How long have we had that open for?
Oh yeah, this is 29 days, and it's actually could be ripe for management. Still in range. Always earning fees up to the right. No one is buying, but that's fine. We get paid for that risk. But yeah, similar. We were a bit bearish, and maybe we discussed this. Intern did not listen, but yes, it's run its course. Meaning, we thought it was going to go down. It did go down. We earned fees 3% in a month. Still good if we're to be consistent in that way. This one could be where we close and then take the profits. And I would now. There's a few more people in the market, so we could buy options. We could do something else if we do redeploy. But yeah, this position is also kind of working pretty well.
Good. Yeah, let's check on the ETH.
Yeah, and let's go to that. This is the dashboard. This is the market's dashboard. I mean, uh, it is showing all your positions, but there's only one, so it's easy to track. This is the call spread that we created. Oh, remember, we have some ETH, so even though we may seem like we're making money, we're pretty exposed to ETH. So that's uh, pretty neat profit here that we're making. It may be on a losing trend because of the ETH component. Um,
Is there a way to kind of hedge that?
yeah, exactly. This is kind of one. My personal portfolio has also a bunch of ETH, and my total profit was maybe positive, but the NAV, meaning that how much value did I get, was affected by quite a bit of the price change. So yes, this is one option good that we earn fees on one leg, we pay zero on the other leg. It's going up to the right. The price is moving, but it's still in range. Well, I'm not worried about this. This is only 2 days old, so this one is good. But what I would say is that the PnL of that position now is pretty much impacted by the ETH balance that we have. So maybe that's another teaching moment. If you look at the chart, I don't know if it helps, but we show the price at the top. We show the PnL right here, but also a delta value, right? Delta. So it's the same delta that we discussed earlier when we created a position. Delta is zero when it's flat. Here it's negative at the current price, negative 0.18, then goes back to being zero when you're in the flat part. So this is your delta of your position. If you add the deposits, that delta now will have basically only the ETH deposit. So one delta on the upside or 1.2 on the downside. So yes, as you say, we could hedge this, meaning that we have some USDC, we have some ETH. We want to protect our ETH deposits. And that would be a very, very natural use case for buying options. What you want to do is to neutralize risks. And because we have a bunch of ETH deposited, you can imagine buying a put option. And these put options, especially at the size we want to buy it, if you remember, we had 1.1 ETH of exposure. I would buy either 0.75 or even 1 ETH as well to hedge. And that means that if we're to buy 1 ETH, there's actually plenty of liquidity for buyers at this size. Even wherever we go, we want to make sure that the Vega, the V here is not too high, but add the money, pay 2% more, which is fine. You could definitely be buying this, that if the price were to move down, you would have downside protection. So you would be creating a more kind of maybe a more stable payoff. That's one way you can buy a put option to neutralize your delta, your ETH deposit.
Yeah, yeah, I think maybe would it be smart to do this for weekly instead of monthly?
Oh yeah, it depends on the liquidity. There is not a lot, so probably
Wow.
not weekly. There is a daily that is extremely far out of the money, and one delta. I would maybe stay away from those because it's like holding the short. So there's less kind of management scenarios. You cannot do anything here. I would still use them, maybe the yearly as well. If you want to be extremely wide, you can imagine buying that yearly put, but I would say monthly. And again, this is a clear use case for buying options as in hedging and insurance policy type of thing. You are making sure your e deposits don't lose, so you are buying options to cover. Um, yeah, I would say we've done it if you remember during the one of the announcements. We got spooked. I don't think it worked, but it was a good protection. So this is insurance, and then yeah, I would say let's do a Bitcoin trade, and why not? Let's do a buying an option to now not lose as much because even though we were exposed, we were exposed, and the trades were bearish. The whole portfolio was bullish overall because of that deposit. So let me paste this second trade now on YouTube, buying a put option to offset your deposits. I did a tweet about this, but if you have any ETH, could be on Aave, could be on Eigenlayer, could be on Lido, you have ETH that you purchase with your real money, and the price of ETH collapses, you won't care about the 5% APY because the price went down 50%. So that's where you can buy options to now get cash to compensate for that loss, get hedging to allow you to now limit that loss. This is all about risk management, and this is all about what options can do. So yeah.
Yeah, I know we don't really want to go above 50% utilization with
Oh,
our deposits either, but I do think it would also probably make sense to kind of try to capitalize a little bit more on the volatility of ETH at the moment as well, since we have kind of two similar
and this is
options
the
there.
leverage component. The capital requirement for buying options is actually pretty small. We do 10 to 1, 10x leverage on buying options. And it's fine. The collateral requirement means that you have to pay the premium, and 10% of premium could be huge. So that type of insurance policy is actually a pretty good deal. The capital efficiency offered by buying put options is surely better than selling options. In that case, you only pay 2% more than Uniswap fees. Some people say that Uniswap fees are way too low anyway, so it's still a win-win there. But yeah, actually, yeah, I would say A in turn. Manage your risk, buy options. The portfolio will be flatter. You will be sleeping better at night. And yeah, that sounds very good.
Cool.
All right, I think that's it. So again, a lot of what we do here is trying to find different trades, different ways to manage the market. Intern has been doing pretty well over the past 3 months, actually, despite the price moves because of Rosalie's good intuition. So we hope to keep it that way. But sometimes you just have to be a bit more careful. Buying options, hedging risk is kind of another way to go. So this is it for Rosalie and the Stop Losing, Stop Trading show. We have Brandon here, but yeah, thanks, Rosalie.
Bye.
Bye. For
Hey,
the
Guillaume.
hey,
Good to
what's
see the
up?
intern still doing well after a wild week.
I mean, yeah, this one hurt a tiny bit more. We discussed this on Wednesday, I think, but it's like, again, all right, come on. I thought the capitulation point is like, if it gets below 1,000, this is when people are freaking out, and
The
that's
ETH
when
price.
people are buying again maybe. And I thought 2,000 was that level ish, but yeah, it went to 1,500. So I'm not a huge technical analysis guy, but there is some like mental stops people have in mind, and 1,100 ETH sends a different message than I don't know, $1,000 ETH. So yeah, I would say
Yes.
that I may be buying options as well to hedge, but yeah, the capitalization is not there. If the macro still goes down, be prepared for a lot of hurt.
Yeah. Trump's pump and dump scheme has been hurting
I mean,
everyone.
the
Extreme
maybe
fear, right?
he's so literal. Maybe we should listen to what he says because that's like, come on. But yes,
Yeah, that was I guess he's more literal than was expected by you. So maybe lesson learned. We'll see if we get burned again. But yeah, we're gonna look at the best and worst trades of the week, see who got burnt by this, who profited off it. Maybe they were listening to Trump's I forgot what his truth freedom tweets or whatever posts before pumping the markets. Yeah, we're in wild times, but we're gonna look at the top and worst traders of the week for the ETH market. So ETH did not go down to 1,100 or 1,000 thankfully, but it did go down to I
like
don't know in the
14,
past week
20.
what's the
Or,
lowest?
yeah,
1,400, just over 1,400. So
I think
I
so.
mean, yeah, I'm seeing a tick at 13.99. I mean, it depends on what
No,
exchange.
yeah, that
Just
might
for an
be it.
instance. So there's definitely some psychological kind of barriers, I guess people have in mind.
Yes.
Not to give any credence necessarily to technical analysis, but there is definitely that psychological component. So yeah, we're gonna look at the trades and so kind of do you want to summarize what has happened over the week just for the markets so that we can give some context to this week's
Oh,
trades?
yeah, that's right. A week ago seems very far, but we were actually pretty different. It was 1,800 a week ago. A week ago, 1,800. Price moved very very crazily back down to 1,400. Went up for a while, went down. Now it's actually and maybe I was looking at the chart, but yeah, the chart tells a uh pretty back and forth story, but net we are definitely down, and these huge moves did increase the volatility, increase the premium, but the net is that you get killed on the net move, and if it went from 1,800 to 1,500, that's a 300% move. It's like 15%. There's no way to escape this. Yeah, 13% down past 7 days.
Yeah, that's a gnarly chart right there. So we are live here on YouTube and X. So if there's a trade you want to feature, how you've been trading this market, drop it in the comments. We can see if we can take a look at your trades. But we're gonna go over the best and worst trades on Ethereum and Unichain, and we like to play a little guessing game here. So Guillaume, what do you think is the best trade? We'll start with the best trades of the week here.
Since it went back and forth and it did end up lower but not too low, I would say that the short call, sending a call, might have been the best trade on mainnet.
All right, selling a call on mainnet. Let's jump to the mainnet trades here. And let's see. I want to make sure I get the right one without revealing all the others. Selling a call, and you nailed
Ooh,
it. All right,
yes.
we'll get rid of that. But yes, selling a call was the best performing trade on Ethereum mainnet over the week. This position was opened about 5 days ago, so that would put us at 1, 2, 3, 4, 5, about Monday or Sunday actually,
Yeah.
and closed about 2.5 days ago, so about Tuesday night or so. We're in the USA time zones, but yeah, that was kind of the really volatile period. I think the market crashed over that weekend. Nearly was it
Yeah, this
12%
was mid
pre?
fall. It did not stay at 1700 for long. If I look at the price chart, this was like, wait, do we have the date? Or at least, yeah, April 7th ish. It did not stay there long. Yeah, there we go. Mint, right in the middle there, as it fell. If you can zoom, yeah. So they, I don't know what the gas was, but actually, yeah, I'm curious. Do you mind clicking on the hash
Yes.
and then see what gas was? Because this is mid fall. They saw running on the wall and said, "Let's do the best trade I can, which is selling a call." Oh, gas price was 6 Gwei. Still not too bad. So
Still
again,
pretty
very
cheap.
very good trade. Yeah, our
Yeah.
friend Kevin. Yeah, we talked about it. I think earlier this week, but yeah,
Think this Kevin guy or girl has been very active and has been doing some really good trades. So yeah, nice job here, Kevin Dash FN.
so yes, this was the right trade to do if you think the market was going to go down. Because if you share, it's not just the price movement, but they earned quite a bit in terms of fees as well. Maybe the premium, but yeah, the $200 of fees, which is kind of the
Significant chunk.
an added bonus. Yes, 800 out of direction of profit, but then 200 out of that was fees.
Mhm.
If you short it,
Order.
if you do a perp, you just get 600. Now you have 700 because of the funding of the premia.
Yeah, that's right. So big bonus here for selling the option. Of course, taking on a lot of risk if the price had gone the other way. But directionally, very correct here with the dump in the pump and dump truck.
Yes.
So got that first part right, and then closed it.
Oh,
Uh,
and then probably at the local bottom as well, like 1470. If you can look at the chart. Yeah, we should maybe make this bigger and easier to navigate. But yeah, I'm sure the entry point, it's easy to see that it's on the way down, and closing point was right before it pumped again, maybe, right? So it revisited that.
Probably, yeah, it hit there, went back up. Maybe they were like, oh shoot,
No, they're
coming
earning
back
fees.
down, and
This is,
let's capture it.
yeah, this is prime volatility harvesting.
Oh, true. Yeah, you're collecting the a more premium over time because this is a perpetual option, right? As
Yep.
this moves here.
So this is good. Again, without being financial advice, but we're it's easier to sell options. You can buy a put option and you pay the fees. You can sell a call options and you get paid. Both of them are directional. Both of them have kind of profits when it goes down. I'm sure the liquidity may not have been there for buying puts, but selling a call was one way. But again, remember, you get paid for that risk. And if you're extremely confident in your directionality, might as well get paid on this premium, but also get that assumption be making you money. But yeah, this is the best way. I would say if you're bullish, you sell puts. If you're bearish, you sell calls. But yeah, at the end of the day, it's about kind of taking control a bit better. If you're dependent on someone else selling an option and buying, then it might be difficult. But yeah, this is all purchase, sell, close, no worries there.
Sweet, awesome. So that locked in a nice 11% profit. I believe that's on the notional. Yeah, on margin, that's much closer to almost 50% in
Yeah,
just under
40%
2 days.
return in 2 days.
Crazy.
Yep.
What does that annualize? Who even knows? Thousands probably. So
No, and
nice.
we want to be honest. It's like it would be disingenuous for us to say 40% in 2 days. Hence, I don't know, 10,000% in the year. But yeah, but
Yeah,
it is true. The fees themselves could be what we advertise. But yeah, high
yeah. Well,
RV, high fees.
great trade there. Big position too. I mean, it's decent position. I think it was about probably about 5 ETH contracts there, just
Yep.
with the 4x or so leverage. So very nice trade. We'll move on to the worst trade now. Yeah. So any predictions as far as what the
Yeah,
worst?
a put seller. It might have been. I don't remember if it's one that was open this week and closed, or but then anyone that had a put, they were probably getting wiped out by the move, and panic closed. Maybe might be the best, the likely outcome.
So kind of the opposite trade. Selling a call is a bit bearish. So selling a put would be a bit bullish. So I think same time frame during the dump time of the markets, a short put would have done poorly. So that's your guess for the
Yep.
worst trade on mainnet. All right, let's switch to this tab. And you are correct, nailed it. 2 for 2. I think you are on the
Oh.
best streak you have gotten. Yeah, let's take a look at this position. What do you see off the
Yeah, it's
bat?
unfortunate. So opened a day 20 hours ago, closed a day ago. So definitely a day trade, less than a day. And also on the monthly options timescale. So again, I would say that it might have been better to kind of let it work for the user a bit because it would still be a bit higher. What's the price now?
Where's the price?
Yeah, 1560. It would not have been like securing a loss, and you would still earn the fees all the way. Um, oh yeah, okay. Yeah, I like these charts too, but yeah, we should add the actual point. It was open and closed.
I
But
think
yeah,
it's open at this part, right? Over
okay.
here.
Sell the top. No, buy the top, sell the bottom.
Yeah, they close it right at the bottom there.
Oh my god. Okay. So, anyways, they get some fees, $30. Might have paid for gas. They lose $300, which again, it's similar size than the other one. I think like 2,700 worth of collateral.
Mhm.
Uh, it is unfortunate, but yeah, I would say that this being unless the person was convinced it was going to go down below the price they closed, which was 1,500, I would have kept it.
Yeah, it
Like,
almost looks like they had a stop loss at 1,500. It went down 10 cents below and, yeah,
yes.
triggered their stop loss.
Yeah, I mean it's dangerous to sell puts. The good news that they got some premium back, so that offsets the losses. But yes, definitely wrong directionally, and it's very hard to manage.
Yeah, so nothing we say here is financial advice. Obviously, do your own research. But how can you? It's unpredictable what the price will do. Unpredictable what Trump will say. What can we do in these volatile? I don't know. Is this a volatile market? The IVs are kind of down too. So, what can we do with all this
Yeah,
uncertainty?
exactly. I did a post on it, but the days following and in the midst of that chaos was great for option sellers because they would get paid a lot of premia. If you want to be directional, then it's almost like a coin flip, and that's why I'm mostly delta neutral. So I would say two things: try to get rewarded for being risk on during these volatile periods by setting options. The more you sell, the more you get in terms of returns because then this volatility pays you again, compensates you for that risk. And because it's hard to predict the directionality one way, one tweet makes the market go up or down. I'm also a bit more delta neutral in my approach. A monthly option normally would be held by for again, you have to let it work for you and 10 days from now, maybe it's going to be above that mint price. So try to be following the time scale and unless you're out of range, try to have the position work for you a bit longer if it's definitely a short time after you minted it. And maybe also, if you want to be extremely passive or more passive, you can do a yearly option. That is now kind of washing off any minute by minute, day by day tweeting. It's a month time scale, multi months. So if you were, and there's a few people selling these super wide yearly options, and that's certainly a fee harvesting strategy. You'll get the same boost in premium if you're wide as a yearly option and then net on the year it can make a huge difference. And yeah, the same way that the last day the tweet I posted said that you earn more in one day than in the previous 10 days or maybe 16 days. So this is kind of a weird thing, but high volatility means that you can earn quite a bit in spikes. If you do it in a yearly, it's the same thing. You have 10, 16 days worth of premia, you still earn 16 times more in that one day. So it is maybe a more risk off strategy, that is you have a yearly option from 1,000 to 6,000 type of thing, where at least unless we touch the pain points, it should not be something you worry about in a year. If you're bullish, that's certainly fine. You can still be between 500 and 4,000, for instance. You can still adjust, but yeah, I would say another trade that I've been doing a bit myself, but then a lot of people should also consider is, yes, you can be active in the market, but not needing to manage your options day to day, week to week, by being in the yearly timescale.
Very interesting. So, I mean, let's say you choose your time scale, be it 1 year for a little bit more hands off, 1 month in this case. At what point do you just cut the loss and say, the price has gone down or gone up so far away from my original thesis that I just need to close this position and start over? Because it sounds like you're kind of describing maybe waiting for it to come back.
Yeah, I think the and it we touched a bit on it on earlier in the portfolio wide hedging. If you have some yearly options, or you have a straddle or a put or a call, you should not be directional in the day to day, week to week. It has to be fee or vesting. But if directionally you're wrong, but you're still in range, what you should do is to hedge, maybe, or use static deltas, or create another position that hedges it. I think Brendan is out, but I'll keep talking. So what I would say is that your yearly option, if it's and maybe I'll share my screen too, but I would say the best advice is to not hedge the position, but hedge your portfolio. In that example, I could be selling a super wide put option, a yearly put that says between 500 and 3k, let's say 700 and 3,000. This is my range. This is very slow moving. This is very, very shallow. If you are out of range, it's dangerous on downside. But if you're in range, you earn fees to compensate. So even though the price may seem to be off, you can still maybe sell a call, create a new option that offsets that loss. And we haven't done it too much, but yet the portfolio wide margining is definitely one way to hedge, where you have multiple positions, multiple timescales, could be bearish, neutral, bullish. In that specific case, you can be neutral ish and risk on both sides. But if you reach that area, you just get the deltas neutralized a little bit. If you reach the other side, you also get your deltas neutralized. And that would be kind of a good way. And yeah. I don't know if Rosalie's still around on remove your open your camera, but yeah, that would be the best strategy for hedging. Do it at the portfolio level, and do it in a way that yes, okay, sorry, Brendan is back, but do it in a way that the intern has been doing it, which is kind of maybe taking a more holistic, the whole portfolio type of. So yeah, I was talking about hedging, but yes, I would say the best advice is to make sure you're in range, not manage until you're out of range. But in the meantime, if the price is moving against your assumption, just use other positions or perps or static deltas to hedge, but still maintain that bonus that is kind of earning fees type of thing.
Yeah, I mean, this position looks a lot more delta neutral. I think you're talking about a really fundamentally different way of thinking, right? When it comes to harvesting like premia instead of focusing on directionality.
And it's a little bit what new swap LPs, I'm sure they have this in mind first and foremost, which is what's my range that maximizes the fees? How much fees do I collect? You can collect over time. We don't quite allow this in Panoptic, but we net this against your balance. But you collect, you just want to see in range. You don't necessarily worry about direction. You just want to be maximizing this. So that's also the way that each position should be thought of. You want to be in range. If you have multiple positions, you look at your whole portfolio. If you leave the range, then you close. Otherwise, you just kind of neutralize your delta at the portfolio level.
Makes sense. Yeah, very very insightful tip. Thanks for sharing. It's unfortunate that that the markets have gone against this position, but
And you think about this, even unless you're an HFT trader or an MEV bot or someone that is constantly looking at the price charts, it's almost indefensible. You cannot say I can hop on my computer, sign a transaction within a minute's notice to hedge. because it's not our job to some extent. Even me, I'm trading, but I look at the damage the next day and manage, as opposed to try to anticipate and react in real time. Yes, market makers, active traders, I mean, high frequency trading firms do this continuously, and they should, because it's their livelihood. But in the retail or pro-tail world, you just have to be managing risk in different ways. And one is controlling your size, but also controlling your positioning so that you don't start too exposed to losses on either ways. A bit more neutral, so that if the price moves by 10%, maybe your PnL goes by 2%. And that's kind of a good enough way to manage risk.
Yeah, that's a huge benefit of starting out delta neutral. Too, the absorbs some of that price movement. So let's take a look. We'll shift to Unichain. You're 2 for 2. You nailed it on as far as the best and worst trades on Ethereum. We'll switch to the Unichain's ETH markets and options trading and look at the best and worst option trades of the week there. So we'll start with the best trade. Do you have any guesses for the best trade on Unichain?
Similarly, a call seller on the best trade and a put seller on the worst trade.
Okay, so doubling down on the
Yeah, I know.
same trades, right?
Go back to basics. Yes.
And is that just the markets have been driving everything? Unichain's probably going to be the same as Ethereum, or what's the intuition?
I mean, a lot of what we've seen in the past sometimes was a strangle or a multi-leg strategy that went wrong. But I think because the chaos means that you revert to your instincts, and either you are pure bearish and you sell calls, or you think there's a reversal and you sell puts, but you wouldn't stay neutral when it's very, very volatile. At least that's human nature a bit. It's hard to remain neutral and say, oh yeah, the sky is falling. Is it going to stop falling or continue? No, I just take neutral. So yeah, I would say that the single-legged was probably what we saw more traded because of that chaos.
Okay, well, we'll see if your intuition is correct, and we'll go over to the best trade here on Unichain. I think it is this one. Nope, sorry. It is this one. And yeah, you nailed it as far as the best trade goes. It is another short call. This one is starting out quite actually closer to out of the money, right? On this short call, and then ended up nearly completely out of the money.
Yeah,
So,
but
pretty similar position.
The way, yeah, price went down. They had a negative delta strategy, and then they still earned about a third, or maybe 30% of their returns is from the fees. So this is actually another one of those good trades, and it's a very short trade, 18 hours. So that person probably paid zero in gas. They made $60 very easily. But very cool.
Yes, yes, and it is actually quite large. I think the position requirement is nearly half an ETH. Given there's about 3 or 4x leverage here, we're looking at something close to 2 or 3 ETH. But it was a nice quick in, quick out, and they got some good directional profits here, plus that Streamia.
Yeah, you got it.
All right. Well, now that you're 3 for 3, we'll see if you're going to make record history in options hour with your guesses. I think you still went with a short put for the worst Unichain position. Do you stick with your guns there?
I stick with my guns.
Okay, well, let's see if you break history here for the best score. And it is a short put that's
an
nailing it
interesting
4
trade.
for 4, 100%. Yeah, good intuition for this week.
Yeah. This is where it's still opened too. Okay, yes. Okay, yeah, this is a short put. Again, I mean, I know, but this is a daily. It seemed very sharp by how it changed. It's a daily option. Normally, you want to hold this for a day-ish. They held this for almost 5 days now. They're earning a tiny bit of fees, but I'm sure it's because the price moved right down. Prices at mint was 1,700. Oh yeah, poor. This was another trade where it was mid free fall, and immediately afterwards, if you were at the price chart, it would be also mid free fall when it was minted.
No price.
Oh, okay.
Yeah, this is scary because it's going off the charts. It's literally off of this chart. I'm not sure if I can
But again,
Oh yeah, there
might
we go.
be a hedging trade. Maybe they have other positions that offset that risk, so it's not as bad as it looks. Maybe they're purchasing. They bought 1 ETH when the price was 1,700. This is effectively what they've done, and they could have bought it on Binance or Coinbase. They did it with an options trade, but now they have overbought their ETH, but they still have a need of exposure, and that's kind of the end state. So, but yeah,
Yeah, good point. So I guess this is pretty similar to just buying and holding ETH. The price went down, you lost, the percentage change there in the price.
yep.
So yeah, unfortunately, not too much of a buffer there with the fees there, just because it went out of range so fast. Real quick, can you just explain the range for kind of the new listeners who aren't familiar with how these perpetual options work? What does this mean, this whole streaming thing, and why did they only earn $1.36 when if I sold this on Deribit, I might actually earn beginning there.
Yeah. So the each position, each option that you sell on Panoptic, it has a range, and it's because we're integrated into Uniswap. You choose a range to put liquidity in Uniswap as well. So when we say daily, weekly, or monthly, it's tied back to a range. In that case, the range is quite narrow, 1730 to 1860. So it's quite narrow. And if you look at the math, if you start in the middle, on average, you will leave that range in a day. The average daily volatility gives you some expected price move, one or plus or minus one standard deviation. So that's kind of how we attach a 1 day timescale to a range, because here it was off, I guess, not even quite in the middle. But if it's a normal normal market, you would expect the price to move out in a day. And if it's a weekly, the range would be wider. If it's a monthly, the range would be even wider. And as long as you're in that range, you earn fees, you get paid. And if you leave that range, you don't get paid. So in that specific case, they minted their option, price should shot right down, kept going down. So they earned a little bit while it was in range, but otherwise they lost the rest. They lost the opportunity to earn when it went out of range. So it's like a I mean, if you trade options, it's like a deep in the money 0DT option type of thing. There's no extra premium; it's all intrinsic value, and then there's no juice to extract. I guess for these in the money options, same thing as here.
So it has the same profile as a deep in the money 0DT option, except they have been holding it for longer than a day. So how exactly does that work? And is that good? Like, is it more flexible for them, or would it have been better that it just had
Yeah, if it's
expired?
a Zuodity, it expires and you have to eat the loss. And then if you cannot, if there's a price reversal, you don't get your money back type of thing. So I can imagine that that's one way to think about this as well, is that even though it has a daily type of activity range, uh, it went against them, but it's not, they don't realize the loss yet. It's like an impermanent type of loss, meaning that it could still come back. That capital is doing not much, and it's contributing some negative, some deltas. So I would say that as long as they hedge it properly, it's fine. But yeah, I would say that the hope might be to see the price shoot up. But in that case, maybe they buy the ETH, they can sell a call, or again even make money as it shoots past 2,000 type of thing. Now, if it goes above 1,800 or 1,900, they stop winning. So yeah, it's a slightly different way to manage your positions than pure options. But yeah, I would say generally, if you trade at dailies, hope to have that trade realized within 1 day. Otherwise, kind of move on. Same thing with weekly and then monthly, yearly. We haven't been out for a year, but a lot of the monthlies, again, 5 days into a 1 day option is like 5 months into a 1 month option. Yeah, both of them have to be managed before that time scale type of thing.
Yeah, that's a common pattern, huh? The time scale is not really matching the holding range here. And so is
Yep.
that just the general takeaway here? And if you, let's say you just lost access, you're on vacation, you come back, this happens, you didn't know, maybe you're on a surprise vacation. So you made this 1 day trade. At this point, would you continue opening this position or would you close it? Obviously not financial advice here, but just
Yeah,
how would
I
you
would.
handle this if
Yeah,
you're
I
not
would
sure?
close it. You can exercise at burn, which is in that case you would physically get delivery of your ETH, and that's going to be in your collateral. That's going to contribute to your PnL, and you can use that to maybe sell a covered call or do this another trade that uses that collateral. If you close it now, you could also kind of eat the loss and then kind of sell the ETH, eat the what the 10% or 12% loss right away, and have less USDC in your account. But yeah, I would say that definitely don't keep it open for too long. And if you do, maybe, and you still hope it goes up, convert that into ETH and use that as collateral that now has can increase in value if the price goes up. Yeah, this is a bullish trade. If they are bullish, if they think it's really going to go up, and they should maybe kind of maximize the profit if it does go up.
All right. Well, that was a great segment we had here covering the best and worst trades. For the first time, you had got a perfect score. So great intuition. Hope you did well during this volatile week. With that intuition, you must have. And yeah, we'll cover these every week. We'll look again next week and see what has transpired and go over the best and worst trades. If you want to be featured, or if you think you had a better trade or a worse trade than most shown here that I may have missed this morning, let us know. Send it over and we'll cover your trade.
Definitely. Yeah, we want to hear from you. But yeah, this is kind of very fun. Some people are active on Discord as well. They said we got them featured, which is a good bragging rights. But yeah, stay tuned for some announcements. But yeah, we will bring back some of the leaderboard and competition aspects that we had during the beta. So that's going to be something that you can actually rank yourselves, be a bit more easy to track the best performers, the worst ones. So it's going to be very fun too. So over the next few weeks, we'll have this be released. So keep an eye open for that.
Sweet. Well, yeah, sounds like an exciting announcement coming up. So stay tuned. We got maybe some cool prizes to go with that too. And yeah, stay tuned for more. We'll see you all on Monday. That's when we do our next live stream. We host live streams every Monday, Tuesday, Thursday, and Friday around lunch-ish time in the Eastern time zone in Boston and New York. And so, yeah, stay tuned for that. We'll go over more intern trades and how to stop losing and start trading. So, hope you all have a good weekend. Any other updates or announcements before we end the live stream?
No, that's it. Yeah, trade safely, manage your risk, don't overextend yourself, and yeah, you'll be successful. All right.
Awesome. Well, have a good weekend and hope the markets fare better this weekend.
Yeah. Bye bye.